Thank you for joining us on Retiring Well this week. We got a great show mapped out for you. We're going to be talking about looming Social Security cuts and how that potentially could affect different areas. We're going to be talking then about the financial cycle from a business owner perspective and how that relates to what's going on in the current markets out there. Getting into the dangers of day trading. Some people love to do that, but what are maybe some consequences to that? And wrapping up the show, we're going to be talking about elder fraud and financial abuse, what maybe you could be looking for to help your loved ones. All this is more coming up right now on Retiring Well.
Retiring Well, brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well. Plan to retire well.
You may have heard of, at this point, these looming Social Security cuts. So laborers' payroll taxes haven't been sufficient to cover retired people's benefits. And so we'll see where this goes, but as of right now, they're projecting that by 2034, it's estimated that benefits could be reduced by as much as 23%. So there could be an answer before 2034, but it can't hurt to be prepared. I'll give you 3 ways to prepare yourself for this. First, increase the amount set aside for your investments. As you've probably experienced over your lifetime, that benefit of compounding and how that can ultimately help you in a long-term plan. So even if that means, well, I'm going to set aside an extra $100 a month as an example. You know, over the course of the year, that's $1,200 a year, but as you figure, if that's maybe over a 10, 20, 30-year period and you're getting some type of reasonable growth on that money, then all the better for you as you plan for your retirement. Number 2, decrease your retirement costs. I know this doesn't sound like a fun one, but what if you're able to start paying a little bit extra on your mortgage and you're able to have that mortgage paid off by the time you get to drawing Social Security. So you have the mortgage paid off, you know, other debts. Ideally, if you're paying a higher interest rate on credit card debt, that would be one to definitely focus your attention on and get that paid off. What about different vehicles that you owe money on, or other toys that you might have, boats or four-wheelers or whatever that might be, that ideally you have those paid for and not owing anything further. Another idea, what about maybe moving to a lower cost area in the United States or overseas perhaps, but that way then you aren't spending as much money. And maybe it's cutting out some of those unnecessary expenses. Have you looked lately at your monthly credit card bill and what different subscriptions you have? I know today now it seems like a lot of the way people watch television isn't the same as it was before. They download these different apps and they're paying monthly fees for those. Are there ones that you really don't use or need anymore? And the third idea would be the idea of delaying claiming your Social Security benefit. So again, you can start at age 62 or defer all the way out to age 70, but somewhere your full retirement age is around age 67, depending on what year you were born. And maybe it's perhaps at that point you collect your benefits, but you still work part-time. So there's different ways to look at Social Security and how to ultimately get the best benefit for you.
What another hot topic there. I mean, will your Social Security actually be there when you need it most? A lot of people have questions, concerns about that. In fact, just recently in the Gaylord office, I met with a couple that was their primary concern. They came to us having already been retired, both already on Social Security, so they weren't sure what they could actually do if that actually does happen some 10 to 15 years down the road, that Social Security is scaled back. Now, there's not a lot you can do, right? But you can first dive into the details, and that's what we did. We dove into their budget. We went through their budget, determined where every last dollar was going, and we came up with a plan. What they didn't really count on was, okay, in 8 years, their mortgage was going to be paid off, in about 4.5 years or so, the 2 student loan payments that they were paying for their children would be gone. That'd free up about over $1,000 a month to help if Social Security does get drastically reduced. They'd have that extra money to offset that. Now, not everyone's going to have that scenario, but it's so important to budget, to understand where your money is going, so in the future, you can plan accordingly.
And I love to hear that, because then, you know, what it really talks about is being proactive. Hey, we have a problem, we're worried about it. Let's be proactive in trying to figure it out. I have many clients in the Cadillac office where we're strategizing from day one. You know, they're 50 years old and they're planning to retire, and right as they plan to retire, this looming Social Security change might be happening, and that's a worry of them. So we get to say, well, we're 10 years, 12 years away. Let's be proactive and put in different products and different things in their plan that they can then have a diversified income plan. So, you know, if you have questions about what your Social Security strategy might be, if you have worries about that, please feel free to give us a call, come in at any time. Hey, stay tuned. Next, we're going to be talking about the financial cycle and the dangers of day trading. Stay tuned. You can have a portfolio, or you can have a plan. You can play it safely, or you can safely plan. You can guess when to take Social Security, or you can make your decision based on detailed analysis. You can hope your savings will last your entire retirement, or you can take action and know. You can let life happen to you, or you can take control. You can go it alone, or you can have an experienced guide ready to walk with you every step of the way. We are Centennial Wealth Advisory, financial planners serving all of northern Michigan, offices in Gaylord, Petoskey, Traverse City, and Cadillac. Simply call the number on your screen for a complimentary initial consultation and let us help you plan to retire well.
I know many of you out there are business owners or know people that are, and you work through what we call the financial cycle and talk about balance sheets and profits and loss statements and all that sort of stuff that entrepreneurs have. But don't tune out if you're not a business owner, because I want to take something, a very simple concept that's very familiar to some people, and relate that to some of the stuff that we're seeing out there now in the markets. So this financial cycle, I want to talk about two of kind of these measuring sticks, if you will, that they have out there. First, basically a profit and loss statement. So what do you have? Basically, you have your sales of whatever you have, sales minus cost of goods sold, minus your expenses is going to equal your profit, right? So then on a balance sheet side, you're going to have your assets is equal to your liabilities and your stakeholder owner's equity, right? So when you kind of visualize those two together, a good, healthy company, has good sales, they have reasonable expenses, and they're generating a profit. that profit can go one of three ways, right? It can go back up to buy more assets, inventory, stuff like that, right? New buildings, people, all of that sort of stuff. It can go pay debts, or can go into the owners or shareholders' pockets, right? So you can easily do that. So a good, healthy company is probably doing all three. So if that cycle gets broken, or if there's challenges in that, you can see how easily that can break down and profits can drop, or you're unable to pay debts, or maybe you're not paying a dividend, or the owners aren't getting paid anymore. So let's look at this kind of in today's world. Supply chain shortages. Those are assets. Inventory would fall into that, right? So, and also when we have kind of our flow of our profit and loss, if we don't have as much stuff to sell, potentially we're not able to generate as much profit, which then we're not able to buy more assets, or we're not able to pay down our debt, or we're not able to give as much back to the owners or shareholders. Interest rates rise, as we've maybe experienced recently. These interest rates rise to this. What does that mean? Your debt becomes more expensive. So even if you're selling as much stuff or you're generating as much profit, if that cost of that financing gets more expensive, maybe you're not able to generate as much to do the other two things. Buy more assets, or pay your owners their shares, or put money in the shareholders' pockets. So you can see this financial cycle is vitally important to businesses and corporations across the world. So a good, healthy business is able to keep this cycle going. And when you have these little interruptions along the way, supply chain issues, labor challenges, interest rate changes, you can see how it potentially can affect that over the long term. If you'd like to talk about maybe your business or some future plans, give us a call. We'd love to sit down and talk with that here and help, so you can help build your retirement plan, whether you're a business owner or not, here in the Northern Michigan area.
What can Retirement Analyzer do for you? Retirement Analyzer is a software tool that can help you prepare today for your financial future. You've worked hard to save for your retirement, but as you near your retirement, you may have concerns. Have I positioned my retirement savings wisely? Have I saved enough for retirement, and will my savings last throughout my lifetime? What impact could inflation have on my future expenses? What if I suffer a long-term illness? Will I have enough money to cover my medical care expenses and still be able to meet my other financial obligations? Could changes in the income tax rates disrupt my retirement strategy? There's no need to be in the dark as you prepare for your retirement. Retirement Analyzer can help you find answers to all these questions and more. The first step is providing us with information on your financial assets, the type and current value of those assets, as well as your sources of income. Then, we work with you to identify your expected expenses in retirement. This will include a discussion of the lifestyle you envision in retirement, travel, a summer residence, whatever you dream your retirement will be. We'll input the information you provide us into the Retirement Analyzer, and in a very short time we'll have reports that show us the percentage of assets currently in high-risk vehicles, as well as the percent in lower-risk products. Retirement Analyzer enables us to project your income from year to year in your retirement and see how long your retirement savings may last. As we change the conditions of the report, delaying your retirement date, including costs for long-term care, adjusting the expected tax rate, or adjusting your retirement strategies, we can see how changes in these variables may impact your income in retirement and the longevity of your retirement savings. Let the Retirement Analyzer help you test drive your retirement strategy today, because the time to discover the bumps in the road is not once your trip through retirement has begun. Contact our office today to schedule an appointment for your Retirement Analyzer review.
NMC Extended Education is offering an educational class titled Retirement Secrets: Plan to Retire Well, presented by Jack Clunder, financial advisor at Centennial Wealth Advisory and a former educator of personal finance and mathematics. If you are nearing retirement or already retired, then this class is for you. Many things can threaten your ability to outlive your assets and retire well. The big three are healthcare, inflation, and taxes. Learn to navigate the critical issues that a retiree must deal with. You'll learn how to plan for predictable and sustainable income, minimize taxes on your IRAs, maximize your Social Security benefits, and avoid estate planning mistakes. We'll also discuss long-term care concerns and what investments are appropriate in different situations. The cost is only $69. Materials will be provided, and a spouse or guest may attend for free. The class will be held on 2 Wednesdays, September 21st and 28th, from 6 to 9 p.m. at the NMC Great Lakes campus. Reserve your seats today by calling NMC at 231-995-1700. Again, that number is 231-995-1700. The class is called Retirement Secrets.
Let's talk about the dangers of day trading. We've seen here over the past couple of years an increase in the amount of day trading going on. And there's different sources out there like Robinhood that have become very popular where they promote it very well and it sounds very attractive to investors, and maybe there's no fees to trade and all of that. But again, there's going to be great risks associated with day trading. Something to keep in mind, all of your trades, if they're done within a 1-year period, are going to be short term. And so if you're using after-tax money from your savings that you're investing into these different stocks, then there's going to be short-term capital gains, which means you're going to be paying ordinary income tax rates. And you want to keep track of those trades throughout the year, those different buys and sells. That's going to need to be reported on your tax return. And so if you're not planning ahead, and let's imagine that you have a good year and you make a fair amount of money on these capital gains, okay, there's going to be a tax liability. So make sure that you're thinking ahead to what that might look like for you. And there's various studies out there that show a low percentage, maybe it's around 10% or so or less, that are actually successful with day trading. So you have to take it very seriously if you're going to be in that industry and focusing a lot of your attention on it. Everybody, always wants to tell you about those stocks that did really well. They made them a lot of money, but you notice that they don't always talk to you about the losses that occur as well. But you figure money managers are out there that are managing billions of dollars, and they're spending millions upon millions of dollars doing research on these different stocks and what they believe projections and how they're going to do moving forward. So there's trained professionals in this industry. So if you're an individual that's maybe looking to speculate about what you anticipate the market to do, there's going to be times where you win and you're excited about that, but there's going to be definitely some times where you lose. And if you get a few winners back to back, it might become addicting, and that's where it could be like gambling. So we strongly encourage you to be careful if you're looking at getting into day trading. There are here at Centennial Wealth Advisory different money managers that we might work with that are going to be trained professionals that may look at the overall market and the economy and make adjustments throughout the year depending on where the market's moving and everything, but not necessarily getting into that high level of day trading. That's again a higher level of risk, and again we encourage you to proceed with caution if you're going to be going that direction. So if you have questions about any of this, we'd welcome you to give us a call here at Centennial Wealth Advisory.
Hey, welcome back from another great segment on the financial cycle. I think it was a great way to see all of the different variables that are connected. When you look at the different profit and loss sheet versus the balance sheet, how those are connected is important to, as a litmus test for what you might think is going on in the current economy, in the current market conditions, and how those are being, and those decisions are being made by the different corporations. But I also couldn't help but pull out what, they said there about in order for this to work, this financial cycle, it needs to be in a healthy balance. So when people ask us what we do, I say, maybe compare it to, what a holistic physician has to do. They're not just going to figure out, where your blood work might be. They're gonna do a entire review of a good physical. They're going to look at all aspects of, what are you putting into your body? What's your exercise? What's your family history? What are you trying to accomplish? What are some areas that might be unhealthy? What do we need to do to fix those? And that's the same thing that we get to do here. We'll start, we'll say, hey, what are you trying to accomplish? Once they tell us what they're trying to accomplish, now let's look at some of the data, of what you have. And then from there, we get to do almost like a red flag review and say, there's some parts here that might not be in balance, whether it's an income plan that's incomplete, or a tax plan that has deficiencies in it, or lack of any tax plan, or maybe there's a misunderstanding about your health care plan and the different ages and how it coordinates with what you currently have, all the way up to what your legacy plan is. How do you pass this stuff to your beneficiaries? And so we get to figure out how to give you some feedback on what a healthy balance in a financial plan would look like.
Yeah, that's great commentary there, Jack, on being healthy in the investment space. Another topic they also talked about was day trading. Might not be the most healthy part of retirement planning, right? I mean, it's very, very risky, and that's something you want to make sure that you don't do all the time. You don't want to get too carried away or addicted to that day trading atmosphere there. So lots of great information covered in that segment. Hope you found that valuable. Stay tuned. Coming up next, we're going to be talking about elder fraud and financial abuse.
Living life isn't always easy. It puts up challenges and obstacles you'll have to overcome. There are responsibilities. You put in effort to provide and take care of your family, to save and invest, to balance work and life. Planning is the first step to succeeding. Plan to retire well.
At Centennial Wealth Advisory, we take a holistic approach to your retirement planning. So it's not just looking at what your investments are, but what is that long-term income plan for the next 30, 40 years of your retirement? What about taxes and what role they play in your retirement plan? Estate planning, what about life insurance, health insurance planning, all key areas to consider when looking at your retirement. So please visit our website or call the number on the screen. We'd love the opportunity to sit down with you for a no-cost, no-obligation visit.
What a sad but very important topic to talk about. Elder fraud or elder financial abuse, anything like that. Something that pains me to even talk about because it's unfortunate this happens, but it happens far too often. In one time is far too often. But want to look at maybe some of the signs that are out there if maybe you're helping a loved one or concerned about that, and just some of the kind of, I guess, give some ideas as a discussion here. When we look at this sort of thing, and it's a growing issue out there, and think of it too, the aging population, the elderly, the retired, they hold a vast majority of wealth, and so they're targets to this sort of stuff, unfortunately. So as you're helping maybe somebody, or maybe helping parents or loved ones look through this, make sure there's proper documentation. If they're getting their taxes done, as an example, make sure you see the completed thing and all those documentations match up. Make sure there's statements for all of their investments. They should be getting monthly, quarterly, annually, at a minimum, statements for this sort of thing, so they have that. If there's ever, that would be a red flag if they did an investment and they didn't have a statement, as an example. And also, thinking of if it's an odd or like an exotic sort of investment, or something that just doesn't seem right, once again, red flag, ask more questions, look into this sort of stuff. There's so many different, I'll call them scams or things out there that either come through the phone or obviously with internet or emails, stuff like that, that are trying to get people to invest in something or give money to a certain place, organization. And so once again, just concern for all of that, because we don't want people to be targets, and unfortunately that's in a lot of cases the elderly become those targets. So what can you do? You know, if you've identified that maybe, boy, I think my parents got taken advantage of, or there was something along those lines, you know, call your local authorities and get them involved. Once again, going back to the documentation, you know, if you think there's something going on, make sure you're kind of having those documentations, that proof that something isn't right for that thing. Also, be an advocate. You know, get ahead of that. You know, and work alongside that. You know, us as financial advisors, you know, we're working hand in hand with our clients and educating throughout different client events and stuff like that, and on the stuff that's going on out there. But at the same time, new stuff is happening all the time. So as more advocates that we can have for folks and helping them try to avoid this, the better it is. Because once something happens, that's challenging, and getting money back, unfortunately, in a lot of cases, can be really, really hard, if almost impossible in many cases. So if you're concerned about this, or you want to talk about anything with stuff, we'd love to have the opportunity to sit down with you. No cost, no obligations visit here at Centennial Wealth Advisory to help you plan to retire well.
Elder fraud and financial abuse there. Unfortunately, our industry kind of gets a bad rap from time to time regarding that. And you know, personally, I've experienced that with some clients that have come into the Gaylord office recently. And it's so unfortunate to see that. And it just makes me mad. I mean, I don't want to see that in our industry. And what happened with these people is somehow some company found out that they were just about to turn age 65, and they were being bombarded with phone calls constantly, trying to get them to sign up for different Medicare supplement plans or Advantage plans. The company actually ended up sending an agent to their door, and he would not leave. He would not take no for an answer. Ultimately, what happened is the clients decided to pursue legal action, and they filed a complaint against this company and so forth. But it's just so concerning to see that. Here at Centennial Wealth, if you say no, no is no, right? I mean, we're not going to take it another step farther than that. And that's something we want to be very transparent with as well. We're going to work in our best way to work for you as a fiduciary advisor in your best interest. Regardless of what we think, it's up to what you want for your retirement.
Yeah, and I think what Nick also brings up there is, you know, when we have our first meetings, a lot of times they're interviewing us, but we're also interviewing them. You know, we're trying to figure out, can we even help you? And do you even need help? And once we get to the answer of, yeah, maybe we do need some help, then the next question is, you know, let's identify those areas that we can help with and add value, but then do you want our help? You know, this industry, it takes a team to do it correctly. You know, it takes you and us understanding what your options are, understanding the pros and cons of all of those decisions, and then deciding you know, which path you'd like to proceed forth. I also think, you know, is back to that elder abuse, it does take a team. And so if you have a loved one that's older, or one that, you know, might need some help understanding what they're being bombarded with, please, you know, do your fair share of being that team player to help protect. So thank you so much for listening and watching our show each and every week. Tune in next week, same time, same channel. See you then.